Hi all. Welcome to the market outlook discussion for the month of March 2024. On the agenda, like every other month, we'll just revisit the education, that is our thinking framework. Then we'll move on to the earnings, how do the earnings look like, the valuations at this point of time, and the expectations. Like we had discussed previously that earnings growth determines the 80% of returns, and for this we have taken example of 1995 to 2023. The Sensex had moved up 11% CAGR, and whereas the earnings had also grown 10% CAGR. So what we see is on a longer duration, your price growth ultimately follows the earnings growth. However, in short term, like for example, for the year 2005 to 2009, there might be volatility, and price earnings growth might not really move in tandem with each other. Moving on to our next principle, that is revaluation growth determines 20% of returns. Now we believe that returns are a combination of your earnings growth and your PE revaluation. That is for every rupee that is being earned by the company, how much is the investor willing to pay? So for example, we have taken the example of Asian Paints that in 2014, the earnings of Asian Paints was 12 rupees, and for every rupee that was earned by the company, the investor was willing to pay 13.9. So in short, the share price was 480 rupees. However, when we come to 2024, the earnings has increased to 57 rupees, and the P multiple has increased to 52. That is for every rupee that is earned by the company, and investors willing to pay more, that is 52 rupees. And hence the share price right now at this point of time was 2,950. So we see that the earnings have grown by 17% CAGR over the past 10 years, and there was a re-rating of multiple that is of 3%, and hence we have gotten a return of around 20% over the past 10 years in case of Asian Paints. Now moving on to the earnings part. Now that we have got the results for the December quarter of 2023, we see that the YOY growth in case of BSE 500 has been coming down at 8%, which was in September 5%, and in June, and before that was in the range of 14 to 18%. So we see that growth across all the large cap, mid cap, small cap is coming down, and we also see that the margins have now started decreasing. If we have to look at BSE 500, now it has come to 8.85 vis-a-vis 9.61. An interesting thing to look at will be the small caps, where the growth in YOY growth in terms of revenues has become negative. That is, if we compare December 2023 earnings to December 2022, we see that the earnings have come down by negative 7%.
Moving on to the market valuation slide. Here we are tracking 4 different valuation metrics, which includes price to sales, alpha over bond, 52-week high, and normalized PE. Overall, if you can see, we have marked orange for the metrics which are not into the investment bracket right now. And if you see banking, we are saying that alpha over bond, price to sales both are looking promisable, and we are continue to do our deployment strategy within that.
Now moving on to the market expectations. So as we have discussed in the beginning of this presentation, that our market movement is nothing but a combination of my earnings growth, which in this case for BSE 500 has been 14%, and my PE ratings, which in this case for BSE 500 is negative 3%. So that gives you a market movement of 11% CAGR for the next 5 years. So if one is to invest at this point in your BSE 500, will stand to make 11%, in large cap 11%, and in mid cap 8%, and small cap 9%. Thank you.